Good afternoon, everyone, and welcome to this virtual event, Safeguarding Our Planet, the Role of Investment, Industry and Insurance. Today's event is hosted by the Next Generation Insurance Network and Zurich Next. NGIN is the Next Generation Insurance Network, a network empowering the next generation of leaders to shape the world they live in. We've been encouraging networking, innovation and change in the industry since 2012. My name is Benjamin Hindson and I'm the co-chair of NGIN and Director of Global Insurance Solutions at Trove, who are a global leader in embedded insurance, powering the future of digital insurance distribution. Today's event is also hosted in collaboration with Next, who are Zurich Insurance's global movement. They aim to give a voice to newer generations, future-proof the company globally, and shape its legacy. I'm pleased to be joined by Nicoletta Polano, who is the Senior Compliance Professional within Group Compliance at Zurich in Switzerland, and is the External Connection Lead for Next. For today's panel discussion, we'll be looking into the ever-topical world of climate change and the collective role we have in safeguarding our planet. We're thrilled to be joined by speakers Walid Al Saqqaf, CEO and co-founder of Rebalance.earth, and Zurich's Johanna, Head of Responsible Investment. Walid is the CEO and co-founder of Rebalance.earth, and having worked in large corporates within the financial industry, he has also co-founded 6 startups, of which one had a successful acquisition. Rebalance.earth is a social impact company and global movement using innovative carbon offset markets as the rebalance mechanism to protect wildlife and enhance local communities. Johanna is Zurich's Head of Responsible Investment, and in this function, she oversees the implementation of a multi-award-winning impact investing strategy, as well as a $200 billion balance sheet net zero journey. She's passionate about co-developing pathways into more sustainable, climate-neutral and equitable futures, and inspiring others to come along on this journey. She's a believer in the force of business to do good and the need of broader political and economic systems to upgrade for future fitness. Today's event will be formatted with 2 short keynotes from each of our speakers, and then we'll open up to a discussion. And we encourage all of you to send in questions via the chat function in Teams. Today's session is also being recorded, and we will be making available the recording to everyone in the next coming days. So please, without further ado, can I ask our first speaker, Johanna, to take to the floor.
Thank you very much. And hello, everyone. Good afternoon or good midday, or depending on where you are. My name is Johanna, as introduced, and I'm the Head of Responsible Investment at Zurich Insurance. As most of you know who are working in the insurance industry, the role of insurance in our world is quite important as an insurer, as a business with operations and an employer, but also as an investor. Most insurance companies actually have a quite large investment portfolio that consists of our shareholders' equity and all the premiums that are coming in. And our biggest job is to safeguard those premiums until we have to pay our claims and make sure we manage them well in between. In the case of Zurich, the size of this balance sheet is $200 billion equivalent around the globe, which we invest from Argentina all the way to Australia. And if you compare that with, that makes us one of the largest asset owners on this planet. And it's actually the size of the GDP of a mid-sized country such as Peru or the Czech Republic. So managing that amount of money, of course, comes with a big responsibility. And at Zurich, as a company, we want to be one of the most responsible and impactful companies in general. So how are we a responsible investor, and what does that have to do with climate change? We've been on this journey for quite a while, and responsible investment means many things to many people. There's no one definition out there, which can sometimes cause a bit of confusion. But think about it as a toolbox. As a responsible investor, you have a variety of tools that will help you to take the long-term view, which as an insurance company, of course, is very important, and then to look at sustainability factors and factor them in while you make investment decisions. Sustainability factors are also called E, S, and G factors, so they stand for environmental, social, and good governance. And we take those into account when making our investment decisions, because our job is something that's very technical. It's called achieving superior risk-adjusted returns relative to liabilities. And it basically means just, safeguarding the money, making exactly as much money as we need to be able to pay our claims and keep the portfolio very close to its structure, depending on where we did business and what kind of insurance we write, whether that's a car insurance that has a tenure of a year or a life insurance for 30 years. Our responsible investment strategy is using a couple of those tools and is based on 3 main pillars. One is called ESG integration, where we use this holistic view and we take into account sustainability information to find all the sustainability risks and the opportunities that could impact the performance of any asset, from a corporate listed share down to a building, and make better decisions of which risks we want to take and want to be compensated for those, and which risks we prefer not to take and where we won't invest. The other side of that coin, and the second part of our investment strategy, is called impact investing. An impact investment is how we do good for the planet while also doing well financially. It means that we're looking to deploy investments intentionally in a way that create a positive and measurable benefit to either the planet or society. So at the end of last year, our impact investment portfolio was at $5.8 billion that we had deployed, and that money helped to avoid 2.9 million tons of CO2 per year and benefited 3.7 million people in making their life better, either by providing them access to healthcare, better education, better infrastructure, or even access to financial inclusion. That's not enough for us. We have targets to grow that portfolio to a size that helps to avoid 5 million tons of CO2 per year and benefit 5 million people. And last but not least, we're advancing together. Responsible investment is still a story being written. We need to learn a lot. We need to work with academia to give us insights, with our peers, with politicians in the industry to go further. One thing we also have committed to is net zero 2050 as a company, because climate change, for example, is a really important topic that we need to tackle. It is one of the very environmental threats that are looming and that we need to protect our portfolio from, and hence really understand the transition risks and physical risks of climate change. But it also poses a lot of opportunities where we can help finance the transition. And because climate change, just as an insurance company in general, is such a big topic and we want to play our role, that also means to be a climate savvy investor. So we have been one of the founding members of something that's called the Net Zero Asset Owner Alliance. So that's 42 global insurance companies and pension funds that have come together and promised that their entire balance sheet, all their investments, will have net zero emissions by 2050, and working together to figure out how that works. And we already set our first interim targets, so where our portfolios will stand by 2025, and are working very hard to help transition. And that means that we'll be engaging with a lot of our underlying investee companies. Most emissions are produced by companies that we invest in. So as an investor, we take responsibility, but of course they're the ones producing the emissions. So we will engage with them to see which ones are on a turnaround story, which ones have not set their own targets, and we'll try to convince them to set their targets. We will also look forward with them to see where they are on their trajectory and which ones are posing a great risk and which ones are posing an opportunity. We commit to help finance the transition. Transition takes a lot of money usually, so whether that's R&D or shutting down coal plants and building wind power instead, or other renewables, that requires money. So the companies that are turning around, we're committed to, through our impact investment portfolio, help them. But then last but not least, we also might need to divest from some, and with that we will reduce the emission intensity of our portfolio over time. I think that should give a little bit of an overview of how, as an insurer and as an insurance investor, we can help play our part when it comes to climate change, which is a topic we'll be discussing mainly today. And maybe hand back over, and then afterwards I'm happy to go into discussion and also take your questions.
Excellent, thank you. So thank you very much to NGIN and Next Talks for giving me the opportunity to participate. So let me start off with a confession. I'm not a conservationist, I'm not an environmentalist, I'm not a tree-hugging hipster either. I build startups. But then in September of last year, I read this article that just completely shocked me. And it was written by the assistant director at the IMF, Ralph Chami. And in it, he stated that an African forest elephant, its ivory, is worth $40,000. But the services it does in the forest in terms of carbon sequestration makes it worth $1.75 million. So why did this shock me? Because it said that we value nature when it's dead, a dead elephant, ivory, but we do not value nature when it's alive. And as a father of 8 and 10-year-old daughters, that for me was simply unacceptable, that they were to grow up in a world that's got, sorry for the term, such shitty values. I said, I build startups, I've got to play my part in trying to change that. So that was in September of last year. And since then, we now have a team of 60 volunteers from the West Coast of the United States to Hong Kong and every country in the middle that are powering to try and change the way we interact and value nature. So how do we do that? First of all, there's two conversations that have been happening for the last years. One is around climate change and carbon offsetting. And a lot of that is fundamentally around planting trees or around the soil and how much carbon it can absorb. And the other one is around biodiversity, which has been talked about a lot recently through the Das Gupta report that was initiated by the United Kingdom's government to try and understand the value of biodiversity. But these are two parallel conversations because, of course, fighting climate change is important, but it does not look at ecosystem destruction of the land, of the ocean. It does not look at the 6 man-made mass extinction of species. So the challenge we set ourselves is, how can you bring both of these conversations together? And this is when the elephant comes in, the forest elephant, because a forest elephant is what's called a keystone species. Now, a keystone species is basically a species that is small in numbers, but has a massive impact within its ecosystem. If that species dies out, then you have the risk of an entire ecosystem collapsing. Equally, if you reintroduce a keystone species, that ecosystem can flourish. And there's a beautiful video about that when in 1995, 31 wolves were reintroduced into Yellowstone National Park, United States. 31 wolves that completely transformed the entire ecosystem. We're starting off with the African forest elephant because that species brings in both the conversation of biodiversity and the conversation of climate change and carbon offset into one. We call it ecosystem services. So a keystone species will perform a whole range of ecosystem services. One of them happens to be carbon offsets. How do we know that? Well, there was a lot of science that was done in 2019 that looked at the forest, the rainforest in the Congo Basin in Africa. And they realized that forests with elephant capture 7% more carbon than those without elephants. And that means you can put a price to those services that elephants provide. So how do the elephants do that? Well, they're quite big, right? So when they roam around into the forest, they kill a lot of small plants, they clear out a lot of those smaller shrubs and so on. What this ensures is that they weed out the forest, like a gardener, if you want. And that ensures that the core trees, or what I call the ancestral trees, do not have to fight for resources that much, so they can grow thicker and taller and perform their carbon capture services better. The elephant, of course, eats a lot of the fruits of that tree and ensures that when it poops it out, it provides great fertilizer for the tree, but also acts as a seed dispersal agent so that he can maintain the forest. The other thing the elephant does, which is not recognized, is that because of the unique services it does within the forest, it ensures that forest humidity level, or what is called, and I always have a hard time saying it, evapotranspiration, which is that the vapor that's coming, the humidity that's coming out of the forest, for example, out of Gabon, provides the rainwater for Nigeria through the air currents. Do people in Nigeria pay for the elephant services for that water? No. So the point I'm trying to say is that they perform a whole lot of services. We just do not have enough data. And this is where, if you want, Rebalance comes in. Because Rebalance.earth is about understanding the ecosystem services keystone species provide and building a marketplace around that. Now, we want to avoid some of the mistakes that are still happening within the carbon offsetting marketplace, which is they're murky, they lack transparency, they're full of middlemen that are here to make a quick buck. Here in our instance, we're using a private enterprise-grade blockchain solution provided by R3. It's called Corda blockchain, which is used actually by insurance companies like Zurich through the B3I blockchain consortium. And just to kill any queries about blockchain, this is a private blockchain. It's not a public blockchain like Bitcoin, which is massive consumers of electricity. Private blockchains, a transaction on a Corda blockchain is roughly 1/10 the cost of an email, just to give you a perspective. So it's very energy efficient. So any clients who wants to buy ecosystem services and still get carbon credits out of it will be able to see everything on the Corda blockchain that is transparent, traceable, and trusted. But you need to get the local community involved. You need the local population to be part of this whole equation. And too often, charities or companies have come in and broken what I call a social contract, where they said, we're going to give you X and you receive a pittance of that X. Through our system, local communities get 70% of the value of any ecosystem services credits that are purchased. 70% of it is used to create jobs in terms of park rangers to protect the elephants from poachers. But more importantly, it is used to raise their living standards through job creations, health facilities, educational facilities, microcredits for women to create their own little companies or grocery shops or whatever, because there's a direct link between empowering women in creating their own businesses with the health of a society. And we want to be able to promote that. And no, I'm not just doing that because I've got 2 little daughters. It's a fact. So you've got the system in place, but you need more science. And that's why we're going to be announcing on the 30th of June at the City of London Green Horizon event, alongside Mark Carney, Mike Bloomberg, the CEO of Barclays, NatWest, Standard Chartered, and of other big companies, the launch of the world's first nature sandbox. So for those of you who are not quite familiar with what a sandbox is, in 2016, the Financial Conduct Authority here in the UK with the Bank of England created the world's first financial sandbox. And a sandbox is an environment where you create new products that you want to be able to test out in a controlled, regulated environment before you release it out to the public. So at the end of this year, in partnership with the Minister of the Environment of Gabon, we're launching the world's first nature sandbox with the verification agencies, RED+, Vera, Gold Standard, and also with observers such as the World Bank and the IMF to be able to test out the ecosystem services credits. So any companies in the future will be able to get verified ecosystem services credits. With those credits, you're not only just getting a carbon offset, but you're protecting biodiversity. And we'll have all the data and the traceability that the blockchain can provide. This is an enormous opportunity. We're all a team of volunteers. None of us are paid. We're fathers, we're mothers, we're singles, we're retirees, everything. And we're here to make this massive impact because we believe we need to change the way we operate as a society. We need to change our values, and we need to be able to have a healthy relationship with nature. The big vision is that in 5 years' time, any country around the world will be able to upload their keystone species onto the Rebalance's platform. Because here, what we want to change is the conversation around natural capital. You don't just extract it out of the earth. You extract oil, you extract minerals. You cut the trees down like you do in Indonesia for palm oil. But that's a limited view of the world. You will run out. What we're saying here, you regenerate your natural capital. You grow it, because that's what's going to provide you long-term sustainable income. We can provide to Gabon $50 billion onto their balance sheet because of the fact they have 45,000 elephants. This is how we're going to change the narrative. And we'd love to have conversation with any of you guys and answer any of your questions. Thank you.
Thank you very much for your keynotes, Walid and Johanna. You were very inspiring and you touched base on so many topics. So welcome to all the participants today. I will be your moderator today, and let me get started with a couple of questions for our speakers. As a reminder, please use the Q&A chat if you have any questions. I see already some of them lining up, so I will move to them in a few minutes. Allow me to start with a question for Johanna first. So you touched base about Zurich and the business ambition for the 1.5 degrees and the net zero emissions for 2050. Can you share with us a bit more how are the suggestions from an investment point of view, how you can structure a 1.5 aligned portfolio? I mean, it seems a very technical thing. Can we try to, let's say, make it easy in couple of points for our audience as well to understand which is the role of investment and which are actually the impacts that can be made into an insurance portfolio in order to achieve those targets?
Of course, happy to do so. I think what is important to understand is in order to battle climate change, we will need a lot of financing. So the role of any investor is important to keep companies accountable to decarbonize and to help those that are changing. Because as I said before, transition, coming up with new technologies, scaling existing technology, substituting technology, all of that requires money. And the money usually comes from investors. So that's point number one. Point number two, how do you get a 1.5 degree aligned portfolio? And the answer is, it depends on who you are. It is possible today to have tiny portfolios that are already 1.5 degree aligned. So there are a few companies that, for example, are pure play producers of windmills. That is a company that is in their own operations, depending on how well they do it, because they probably still have emissions, but at least that truly help to become aligned. Or if you have a portfolio of only green buildings, most of them will not be able to be net zero today. So they're also not 100% aligned, but they will put you forward. The world as a whole, as we know, is not 1.5 degree aligned because we're on a 3.6 degree trajectory. That is business as usual. And if you play in the league as Zurich does, we're something that we call a universal owner. If you look after 200 billion of assets, there will be some invested in corporates via equity and via debt, some invested in sovereigns, some invested in buildings and infrastructure. But in general, we're so large and we have to diversify so much and we're globally active that we call ourselves a universal owner. That basically means you own a fraction of the world economy. And if the world economy is 3.6 degree aligned, you can't today be 1.5 degree aligned. The other important thing is to understand is that emissions mainly come from industry, so that's private corporate, some of them are state-owned, and land use. And land use is sometimes private and sometimes state-owned. But if we think about that most emissions come from corporates, it's like a double booking system. So all those emissions are produced at the corporates, and that's where they have to go down. But every single company, especially if they're public and they're listed, there will be some investor in the background that either owns some of their shares or gave them debt, their working capital that they work with. So the entire corporate emissions also exist as their shadow, their mirror image, which we call financed emissions, on some investor's balance sheet. Even in backing up your insurance contracts that you might have, in your pension plan, and if some of you own shares, then even you hold some of those financed emissions. So that's how the role as an investor comes in. How do you get to a 1.5 degree aligned portfolio? First, set a pledge to do it, to become net zero by 2050. That's a scientific translation of how we manage to, with a high probability, manage to contain warming at 1.5 degrees. Then you kind of need to break down what you can already do today. We start with corporate emissions because that's where most of the emissions come from, and buildings, because we can also measure those. At the moment, we don't even know how to measure the carbon footprint of a country and accordingly the sovereign debt that we hold, or for infrastructure, or for private equity, where you have money, startups underlying that don't necessarily report. So there we still have data issues. So we started where most of the emissions happen. We have data today that is not perfect, but it's good enough to start working. And where as an investor, we have an influence because we either own the company or we give them the money that they work with. And then, as I said before, it's very important to be mindful of the effect you can have. Investors can be very effective in going in dialogue with companies. We have voting rights as a shareholder. We can decide to not invest into a company anymore. We can decide and tell them your risk is relatively high. So if your sustainability risk is higher, we also want a higher return. So your cost of capital of doing business increases, and companies that are doing well, they're becoming less risky. They're becoming more of an opportunity. So the cost of capital for them goes down. So those are the levels that we can use. As I said, really engaging with the companies, making sure you have a good dialogue, you see where they're going, you encourage them to move. Then also investing a bunch of that money into companies that are turning around, because interestingly enough, there are a bunch of things that are already green and those need more funding. But the bulk of the money actually has to go into companies that are not yet green today, but that can become green, that can change their technologies, especially in producing electricity, but then also in mobility, in the way that we do agriculture. A lot of change needs to happen there, and it's more likely that the incumbents will actually be able to come up with the necessary changes and implement them than, disruptive new companies from left and right, which of course can still happen. So we need to keep an eye out for that. And then at the end of the day, you look at who's moving, who isn't moving, and those that don't move become an even higher risk. So you will start divesting and you will start pulling money away from them. And as we start working on corporates and real estate, then of course we also need to develop the methodology and get the data for the other asset classes so we can tackle them as well. Because by 2050, we need to tackle all the asset classes and all the greenhouse gases. And that's quite some work ahead, but it won't happen unless you do it. So the more investors start on that journey, the better it becomes. But we also can't do it alone. So we need all the corporates. We need regulators and governments to actually also, give us a new set of frameworks that help to encourage the transition. A lot of companies can't transition as fast as they would because actually there are regulatory barriers that are keeping them from it. So we also need to work on good governance. We need to work on a global carbon price because the carbon price is nowhere near where it should be. And in this case, really market forces will work a lot better if they would receive the right price signal. So we also lobby a lot for that and just try to really connect all the puzzle pieces and play our role as an investor in that.
Well, thank you very much, Johanna, for your very thorough explanation about how to get to a 1.5 and zero emission for 2050. A quick follow-up question on that, and then we have a couple of questions for Walid. I recently read that some financial regulators are actually going to introduce or are thinking about introducing in the future mandatory disclosure requirements for climate risks. What's your view on that? Do you think it's a good step? Do you think it's something that is going to, let's say, make companies more willing to disclose? We know in other different areas that every time that you ask for disclosure on something, maybe is also a good trigger to get some of the problems solved. Do you think that that could be a good step forward? Do you think might not be enough? Or how much do we need to, let's say, rely on, let's say, regulators asking for disclosure, or how much the companies are actually proactively about to disclose in the future with regard to climate risks?
As an investor, we certainly welcome that, right? Because I talked about ESG integration and climate risk is an important part of E, and we need to be able to see both. We need to see the risks, and maybe if, in case you don't know, there are physical risks, which is if the planet warms, we will see more wildfires, more thunderstorms, melting glaciers. And if you live in Switzerland, we already have, a lot of more mudslides because mountains are starting to come down because the ice of the glaciers is retreating and doesn't hold it up anymore. So any company or private person dealing with that, of course, that's the effect of physical risks. And we feel that very much also on the insurance side, that is already happening because the planet has already warmed. The other thing is, if we want to stop this from happening, we need to transition to a climate neutral economy. And transition risks are the risk of companies standing on the wrong side of history and not changing, and accordingly being hit and probably losing their competitive advantage if a high carbon price comes in and if they're not moving. And as an investor, it's very important to know which parts of your portfolio are prone to those risks and manage that well, and then also who's part of the opportunity. And TCFD will help because it asks companies to say, how do you govern climate risk? A, are you aware of it? How do you govern it? Is it set up, is this a job of the board level, or is this something that the sustainability team does on the side? Do you have a strategy? What is the strategy? And have you actually thought through your risks? And how big are the risks? And can you tell us how you deal with that? And as an investor, of course, that's very valuable information. Now, as a company, we know there's a little bit of survey fatigue, and reporting is always costly. But it can give, especially TCFD, I think there are still companies out there that pretend they're fully on top of climate risks, but have never truly thought it through or calculated it through. And we know that the results might not be comparable because everyone uses completely different assumptions. But what it will help you is if a company can back things up with enough qualitative narrative, it gives you comfort as an investor that they actually properly thought it through. Thinking it through doesn't necessarily create action yet. It just creates transparency and costs for the company and some brain grease. But we, of course, we do have the hope that those that realize when they need to do it, that they thought they had thought it through, but haven't, that they will change their actions, that they will adapt and act quicker. It's not a guarantee, and it will certainly not be enough to actually inspire action. We need completely different incentives for that. Reporting doesn't create action.
Well, thank you very much for clarifying that. We will for sure get back. We have a couple of questions also on climate change, about the greenwashing that we just been partially mentioning. We will touch base on it later. Walid, a question for you. I think you got totally the audience when you mentioned that nature values most when it's dead than alive, and that's very, very scary, right? We never thought about that, and actually we would like for the future that this is actually not the way you're thinking, right? So you touched base briefly on the impacts on ecosystem, but also the positive or negative impacts on local communities. Can you share a bit about your experience, the initiatives that you're driving within your startups, within your companies, which is actually the positive impact that can be done when we take care of ecosystems and we produce also positive impacts and effects on local communities?
Wow, how much time do you have? There's a huge amount that can be done. So let's maybe focus a little bit more on the local communities for now, and then I want to touch base also on the buyer side on why should corporates or even households, should look into this kind of schemes. So local communities all around the world, especially in developing economies, have had what I call a broken social contract, where you would have a well-meaning NGO or initiative that says, if we do X and you support us with Y, then you'll get Z amount of money or Z kind of resource. And usually it was down to a factor of 1/20th of what they actually got. So there's too often been this case of a broken social contract between a well-meaning entity and what was the actual result. And that's where, if you want, we come in as quite a very clear differentiator, because as I said, and I think, Johanna touched upon it around the element of transparency, is that you need transparency, you need traceability, you need the trust for us, the 3 T's whenever anything happens. So with Rebalance.earth blockchain system, whenever a client purchases, an ecosystem service credit, you will see that transaction, and all permission parties will see the money arriving into an escrow account. So an escrow account is a bank account that releases funds around a certain set of rules. And one of those rules is when we have a sighting through one of our camera traps or a sonic sensor that detects the sound of an elephant, of a particular elephant that is servicing a contract, whether it's Zurich, Bupa, or anybody else, right? Whenever we have that sighting, then we release a token, a digital token to the tune of roughly $80. $1.75 million, over a 60 years average lifespan of an elephant, equals $80 a day. So if you're a local community and you reside around, let's say, a tribe of 10 elephants within the area, there's $800 a day that is arriving into this escrow account, of which 70% of it is being released to the local community. And the local community is using it to pay for the park rangers to protect the elephant from the poachers. But the majority of it, as I said, goes into raising their living standards, providing health, education, and employment opportunities. That is all clearly visible. They will always get that money. It's as long as the sightings of those elephants happen. So there's never an issue of where has the money gone. There's always this transparency that builds trust, and it helps to raise, as I said, the living standards of those local communities. So it's a win, but also it creates a different kind of win. So in some countries, for example, even in Gabon, you have elephants that comes into local villages and eats the crops or destroys property. So people defend their property and sometimes will kill the elephant. So there is this kind of weird relationship between local communities and elephants in some instances. What we want to create is a different kind of relationship. So imagine suddenly, instead of traveling 100 kilometers to go get healthcare for your kid, you only travel a few kilometers because there's this brand new health clinic that's been built and managed, and the doctors and the nurses' salaries are all paid for by a little placard that says at the entrance of the clinic, paid by your local elephant. And this creates a difference in changing conversation. It links the relationship between the elephant. You take care of me, you protect me, I will protect you, I will take care of you. And the crops that the elephants are coming to eat, you can create incentives for farmers to create farmland by the edge of the forest for the elephants to go and feed instead of coming into the towns, and we will pay them for that. So again, it's about how can you create win-win relationships between local communities and the elephants. And for that, you need to talk and you need to engage with local communities on a regular basis, as we do. And we will have offices in all countries in which we operated. Now, I just want to spend a little bit of time regarding the companies. Why do companies want to do that? And first of all, we're not going to work with any company that has not made a clear and public statement of by when they're going to become carbon neutral and how they're going to achieve that. So we're not here to be used for greenwashing. We do understand that sometimes the technology and the process are not there in place to go completely carbon neutral. So that's when offsetting to us is an interim step in getting to that direction. But I think companies are increasingly recognizing that the Generation Z, or if you want, the Greta Thunberg generation, you know, the Swedish activist who has millions of people who are protesting, says we need to, stop our house burning, which is an expression she uses often. These generation are your future employees. They're your future consumer. They are aware of the mess that we have created and that we have sustained, and that, yes, we're trying to fix, but we're equally responsible by our lack of action or limited action. So it is in the interest of every company to play a role, and in insurance companies, of course, the interest is even higher because of the impact climate change have and how much payouts are going to be related to that instance. So everything is interlinked. We just need to understand it a bit better, and we need everyone to play their part into it, whether it is a household, whether it is a company, or whether it is a local community. And I hope that's answered your question.
Yes, it does. I'm sure you have tons of many more examples
Yes.
and experiences to share. So maybe we will have to set up a follow-up event in the future to discover a bit more about that. We actually have a question from the audience that I would like to quickly pick up. And one of our participants is asking, how many questions is Rebalance.earth active in? And I was wondering how it could be scaled up. So Do you think that your model is scalable? I guess so. I think you're doing it already. But how much scalable is it? Can it be replicated anywhere?
Yeah, so just to clarify, so the idea came to me only in September of last year. In November, I sent out a message, say, hey, who wants to join a team I'm setting up? And since then, we've got 60 volunteers from all around the world. What we're looking to do is to launch our first pilot this October in the Loango National Park in Gabon. So we haven't launched yet. None of us are paid. We don't even have a bank account. We're all volunteers, but we're getting support from a huge array of organizations. But we're launching through this nature sandbox because we realize that you need the science, you need the stakeholders from Red Plus, from Vera, from Gold Standard to create this new standard. We have a community of 57 universities who are all linking together with us to open up their science labs to get the data from our sensors to try and unlock biodiversity and understand all those ecosystem services. So it's a multi-stakeholder approach. once we've tested it out correctly in Gabon, we're going to scale it up to most likely the neighboring countries, the Democratic Republic of Congo, Cameroon, who have African forest elephants. And then we're going to start expanding into other keystone species, whether it is the orangutans in Indonesia or whether it is the great whales off the coast of Chile. But these things take time. My hope is that between the next 5 years, we would have demonstrated how this system works around 3 to 4 different keystone species, so that we can open up our science model so that any country around the world can upload their own keystone species onto our blockchain platform. Because imagine if suddenly Indonesia says, I'm only making $1 billion from palm oil by chopping off those trees. I could be making 2 to 3 billion out of the ecosystem services provided by the orangutans. And that's when you change the conversation. I'm afraid to say appealing to people's hearts does not work. You need to do that, but you also need to get onto the incentives. Most of the time it's monetary ones. And we believe there's a way of doing it, and that's what we're here to validate by the end of this year.
Well, thanks for adding more details on the initiative that you're planning and you're about to launch. So best of luck also for the pilot and for the scale up in all the other countries. Actually, I have a question for both of you that actually we have also twice in our chat. So I will try to merge it all into one. So a couple of participants are actually asking, is actually climate change, did the conversation in the public space move the needle? So, or are we just in the space that is still a PR move or greenwashing, as both of you mentioned? So what are the pitfalls of a lot of companies going out and, let's say, explaining what they're about to do in the future, what are their plans and how much green they are or they're going to become? So what is the danger of all this greenwashing that we are seeing on social media and on the news on a daily basis?
I'm happy to start on this and then hand over to Walid. So, are we doing enough globally? No, we're still on a 3.6-degree path. It's not enough. But I do think the tide has changed, and I think we've all become, in the past 2 years, I've never seen opinions change so quickly, and I think to a certain degree, we need to thank, Fridays for Future and all the protests that are going on, but also a lot of movement in the corporate space and that net zero pledges becoming more accessible and becoming more normal. I remember in June 2019, Zurich signed the 1.5-degree pledge with the UN Global Compact and the UN as the first insurance company. And then in that same year, we were a founding member of the Asset Owner Alliance, and we were 12 at the UN Climate Summit in 2019 in September. 12 global asset owners said, we will pledge net zero balance sheets, and we're coming together to figure out how to get there, because no one has done this before, and it's non-trivial, but we'll work together to do so. And in looking for those 12, we were still considered a little bit crazy. Now, a year and a half later, we're at 42 members that manage 6 trillion asset under management. There's a net zero asset manager initiative with, I think, 35 global large asset managers and growing, and a net zero banking initiative. So conceptually, there are now, for all the buckets in the financial industry, there are organizations you can go to where we're trying to not reinvent the wheel, but get all the information we need, give people plans of what you're doing, right? So I think there is very, very, very good momentum, and it has to keep growing, obviously. Also, the Science Based Targets Initiative, where companies can pledge, I think it's over 1,500 companies that have pledged net zero. Now, pledging net zero is, as mathematicians would say, a necessary but not sufficient step. I mean, at the moment, there's also, it seems to me, even in my social media bubble, a lot of general suspicion that every net zero pledge is pointless and just PR because it's 30 years out. And I do believe that's unfair, because it takes a lot of courage and management action to get there in the first place. And now, of course, it's not so crazy anymore, and we start to kind of shift to, if you haven't done it yet, you're lagging behind, which is amazing because now we have competitive forces in there. And as I said, it's the first step, and then you need to figure out how to actually get there, which is for all the sectors not necessarily trivial. So we have more and more sectors covered with a little bit of a playbook of what you need to do to break those 30-year journey down into what you do in the next 5 years and then the next 10 years, right? There are certain industries that need scaling. So one good example that I really liked was a few years ago, Maersk, which is one of the biggest shipping container companies on this planet. They went for net zero 2050, and they said, guys, we ship around a lot of containers, but what we not do is building ships. And for us to get to net zero by 2050, we need net zero ships by 2030. Dear shipbuilders, here's your challenge. Figure out how to build net zero ships by 2030. We will then buy them, right? So you need to go across the supply chain. You also, for an electricity company, you can't just, there's still almost 6,000 coal-fired power plants on this planet. They all need to shut down before 2040 latest. But you can't just shut down a coal-fired power plant without the substitute, right? There was a blackout in Australia that had 40,000 people in the dark for a couple of days. So, and we still have a growing energy demand. So you need to buy renewable energy plus more in order to shut down a coal-fired power plant. It requires the person that builds this, which can be a private company or state-owned company. Renewables can upset the grid, so you usually also need to develop the grid, and the regulator can. There are a couple of coal-fired power plants that actually operate at a loss, but they sit in such an important stage in the electricity grid that the municipality, the local one, will actually pay the company for the loss just to not turn it off. So just to say, all of this is complicated. Watch out for targets, because you're starting to be a laggard if you don't have targets. Then give them a bit of a reasonable time frame, which can be up to 2 years still, but the more of us that do it, the more we'll have a blueprint where the next ones can follow much quicker. But then look out for interim targets and whether they're meaningful, and then get moving. You might be interested in Climate Action 100+, which is the largest engagement platform for investors, where we come together to kind of divide and conquer and talk to companies in an organized fashion. It looks at the 160 largest companies that are responsible together for over 3/4 of the global corporate emissions. And they now have a benchmark of who has targets, who has broken them down, who has pledged and made visible some capital expenditure to actually move around. So there's more and more tools to help you identify. And then also the split of green versus brown revenues that will show us who's starting to put some action behind words. But it's important to be suspicious, but it's also not every net zero pledge is PR to start with.
So yeah, just want to build a bit on that from I guess a consumer angle, because I don't know about you guys, but when I watch one of the David Attenborough documentaries, it's like, you got this soothing, beautiful grandfather-like voice and beautiful imagery, but at the end of the episode, you're like, oh my God, we're all gonna die, kind of feeling, and you feel as though, okay, I've got to take some steps, I've got to do some action, and then it kind of falls apart, right? Because taking action is very hard, it's painful, and it's, where do I start? There's a lack of awareness, of guidance and education. I mean, if we take, for example, Switzerland, I think it was just last week, the voters rejected a government's plan to tax on car fuel and on air tickets. So there is obviously a problem in the discourse. I believe that one of the things we need to look at in terms of fighting climate change and educating people is leveraging existing human behavior. You don't want to create too many new ones. So I'll give you an example. You're walking down your high street, you're having a sandwich. What do most people do? They hold on to the packaging until they find a bin and they put it into the bin. Most nice people would do that. They're not just going to throw it in the street. Now you go for a drive, you go to a restaurant or whatever. You are creating virtual garbage when you're doing that in the form of carbon. What we need now is a bin equivalent to that, and to leverage that kind of behavior you have in the high street with your sandwich, to now take that virtual garbage you've created and bin it out by offsetting it. Ideally, of course, we want you to change your behavior, cycle, use public transport or whatever. And that again comes back to this point I think I was making earlier on, which is about aligning incentive mechanisms. and to make sure that every single stakeholder, whether it's an individual, a household, a company, a government, all aligning around that, and that the information is shared in a transparent, trusted, and traceable manner. And that's why I personally think, blockchains or provide great opportunities for that. But, time will tell. What is certain is that we all need to engage. We all need to be talking to each other and taking the necessary steps and experiment on how we can solve this climate, because we're all responsible for it in some shape or form. Even in this webinar, we are consuming electricity, and we need to be conscious of our footprint and how to mitigate that.
To both Walid and Johanna for the tricky question about greenwashing. I think I leave the floor to Ben now for the wrap up.
Thanks, Nicoletta, and thank you to Johanna and Walid for your insights. I mean, such a fascinating and multifaceted topic, and it's insurance and investments, and particularly the role of industry is really kind of at the heart of driving the changes that we want to see, particularly if we want to get to that net zero by 2050. I mean, some of the key takeaways that I've taken away from this session is really about, how can we work together in partnership to generate value out of the natural economy and really kind of help drive the changes we want to see. For me, it's really encouraging to see some of the steps that are taking place already. And the journey sounds very long and the roads are going to be quite windy, but we are going in the right direction. And for me, the importance of even just setting that target and getting the incentives to really make the economic and social sense of the targets is where we're going. So thanks again for your insights. I'm sure there's lots of questions and that people will be going on to do lots of research on these topics. I'd like to thank Nicoletta for doing the moderation during today's panel, and also to Zurich Next for facilitating this. Just to let you know that NGIN are organising a number of events over the coming weeks, and I'm sure Zurich Next have also got a big event schedule planned, so we'll be in touch following up with the event with a recording of the event as well. So thanks everyone for joining, and we hope you enjoy the rest of your day.